All right, so I've got a PowerPoint here that I want to share with you. It usually takes about an hour and a half to get through, so I'm going to have to skip around a little bit. I'll try to cover the meat of what I want to talk to you about and share with you in about 50 minutes, which means I'm going to have to leave out some of the comedy routine, right, which is fine. You don't really care about that anyway. You just want to know how to make money, right? So the topic of this webinar, the topic that I've got here is the mother of all financial bubbles is about to pop. Are you ready for it this time? And it's actually already popping, right? So we've had the index futures roll over. We've got a really good position short in the bonds and short in the gold. So I'm going to show you how you can catch those two. Believe it or not, it's not that hard. After you've done it for a while, it does take a specific thought process in order to go through it and work through the things. So let me just change my headset out real quick. It'll take 2 seconds, and I'll be back with you. There we go. I'm solid. There we go. Now I'm good to go. All right, so let's move on to the next slide. So now I am a registered Series 3, which is just a complicated way of saying I have my own brokerage firm. I clear my own funds, and I had to put up some money in a bank, and now the CFTC and the NFA is my regulatory body, and I have to make sure that you read this disclaimer and understand it. Now, I'll describe it to you. I'll break it down to you. What it means is, number one, why am I a Series 3 and a Series 30? Because I like paying the lowest possible commission rate I can. And the reason I do that is just because when you goes in an up direction, it's fairly easy to make some money. If it's going in the down direction, not even easier. But if it's going sideways direction, you chop up. And all you do is you just grind your account to dust, plus you've got all those commissions. So what I'm doing is I'm taking some of that grind out and some of that cost by lowering my commissions is why I have done it. Now, you should never trade with more money than you can afford to lose. Never, ever, ever, ever trade with more money than you can afford to lose. Only trade with discretionary income. And what I'm going to do is I'm going to say you have about a 98% chance of blowing up your account at least 2 or 3 times and losing all your money. Do you understand? And I actually try to make it even worse. I say, hey, your trading career will probably end up like a bad country song where your wife's going to leave you, your dog's gonna die because there's no cats in country songs, your kids hate you, they repossess your truck because there's no cars in country songs, and they also foreclose on your home, which would be either a single wide or a double wide trailer. All right, now just give me a visual yes if you understand what you are doing is inherently dangerous to your wealth and your health, so that I will make sure that I am covered, and this way I make sure that you have read CFTC Rule 4.41, because I don't think I would do well with Bubba in an orange jumpsuit in a federal prison, so I need to make sure that I scare you to death, all right? All right, my name is Hubert Centers. I am known as the guy that has a no BS approach to trading and investing in the trading world. So I'm not going to ask you what you trade. This is where I do a lot of polls, so I'm going to skip some of these on purpose because I have only 50 minutes to share with you a really good strategy to trade with right now, with what's going on right now, because there's certain bubbles that are popping and you need to be aware of. I am going to ask you really quick what level you are currently at. Are you at level 1 where you've got really effective at burning cash? And so in other words, your burn rate is really good and you are really effective at losing lots of money really quickly. Everybody usually starts out at that stage. And then what happens is you learn to lose small amounts of cash and you get effective at that because level 1 sucks and it's painful and you want to quit it as soon as you can. You're like, all right, I'm just going to lose a little bit of money. I'm just going to do it over and over and over, and you end up dying the death of 1,000 cuts. And then you get to level 3 where you make a lot of money and then you lose a lot of money, or you make a little bit of money, lose a little bit of money, make a little, lose a little, make a lot, lose a lot. A lot of people get stuck at level 3 because they don't hold on to their winning trades long enough, and they'll have 1 or 2 or 3 catastrophic events that just blow up their accounts. Now, after you figure out what you need to do in order to get from level 3 to level 4, you will then start making a consistent cash flow. I'm going to asterisk this. I don't know what consistent to you is. I don't know if it's $200 a day, $2,000 a day, $20,000 a day, or $200,000 a day. It really just all depends, right? And then eventually, hopefully, you'll get to a point where you're making a killing. Also, asterisks, I'm registered. I'm not going to make earning claims whatsoever. You'll hear me say a lot probably or potentially. Usually it's potentially. And I'll usually talk about risk way more than I will reward, because as a professional trader for the past 25 years, you should always think of risk first and reward second. The only problem is when you first start trading out, you think about the reward and you don't really think about the risk, and then you will learn it by the school of hard knocks, and it sucks and it's painful. All right, so I've done a decent job of trying to scare you off of the markets. I also have to tell you like where I come from and what I believe in. So I believe you can do basically anything that you set your mind to. I am a fat redneck from Eastern Kentucky, right? I still am I'm also a multimillionaire, but I didn't do it overnight. It's like that 10-year overnight success story, right? So I didn't have a whole lot of role models when I was growing up. So I had to pay for access to people in order to learn the knowledge from them. So I would work really hard. I'd save up my money, and then I'd go pay somebody for coaching, or I'd pay somebody for some advice or consulting. Now I actually can hang out with a lot of these people as friends that are in joint masterminds with me, like, you know, Paula here. You can see cute little Paula. She's actually about 6 inches shorter than that because she's got 6-inch heels here in front of the picture in the office. Richard here, he's got more lovely blonde locks than I do, but I've got him beat on the chins over here. Both Richard and I have a chuckle because we talk about us being dyslexic. And then this is Mr. Wonderful. This guy is actually evil. He's evil. And if you ever have to have dinner with him, if you're not really into wine, it's going to be a very boring dinner because that's all he talks about. And then this is Dave Ramsey. Dave and my companies do some work with each other. And then this is me. I'm the guy with the big catfish head here, this thing right here. I never wear these things unless somebody just makes me for a photo shoot because I think they're very uncomfortable. So right now I've got on a pair of jeans, a T-shirt, and a pair of tennis shoes. In the office here, I'm in the PC that I'm talking to you in right now. I've got 6 24-inch LCDs. I'm talking on this microphone. When I grew up kind of poor. Not real poor. I mean, we had food on the table and stuff like that, but, you know, lower middle income family. I always watched a lot of Ghost of Mr. Chicken and Scooby-Doo episodes, and I was like, man, if I ever make enough money, I'm going to build a cool house that has bookcase doors and secret passageways and stuff like that in my house. So currently at my house there is a bookcase that leads to my office like this. There's a button and a book that you pull, and then it opens up into a small 1,500-foot office here in my house. And then there's a couple other little secret little passageways with bookcase doors, and I just did it because I thought it was cool. So I know it's geeky and weird, but I'm kind of into that type of stuff. So congratulations, you are about to witness one of the biggest bubble pops of all time. You're in the right place at the right time, and here's why. So the market's going to pull back, obviously. It's actually right now in the process of doing that. So if you're not ready, you're going to lose a lot of your money in the markets if you make the wrong moves. You have to do the right things at the right time. Doing the right thing at the wrong time will not work, and it will not get the return that you want. Today you're going to discover the best way to do just that. So I'm going to show you how to time the market. Now, you're coming a little bit late to the party, right? But there's still things that you can do, and I'll show you how to do that. This tactic or strategy has helped me catch some really great moves. And before I do that, let's talk about Aesop's Fable. I'm going to skip the story because it kills too much time. So let's get right into the meat, all right? So I'm going to skip the bubble poll, but really quickly, do you think that the market is overbought? Do you think it's due for a pullback? Just really quick, let's do that. I can do a real quick informal survey with everybody here in the webinar. I don't have to poll you, but just let me know, do you think we're due for a pullback? Is it a little bit frothy, a little bit of high cotton? In other words, is it overvalued and do we need for points? So most people, yeah, I would say it's about 90% overvalued. Okay, all right. So let's build the case for this. Now, obviously, this is the internet, so I could build a case for anything. So take this all with a grain of salt. I could actually build a case like, okay, it's now time to buy. We've pulled back enough, right? So let's build a little bit of case for this. And what we're going to do is we're going to build a case with this with just some good old-fashioned fear, some good old-fashioned greed, some logic, and some experience. So here are some scary parallels, or not, right? Maybe this is a scary parallel, and maybe it's not. So here's the crash of 1928 and 1929. Here's the Dow in the past 28 months. This is back in 2013. This is 14. Now here's 15, year 2015. What we did here is we went higher, and then we double topped out, and now we're pulling back. So does that look close? I don't know. Let's take a look at another one. Here's 1928, 1929. So here's 2014. What we did is we kept on going and going and going, and then we topped out, and then we went lower, and then we pulled back up, and then we did a double top, and now we're pulling back a little bit. it's looking pretty close, right? It's not going to be an exact match. Nothing just happens over and over and over and over again, all right? But you can, you know, most humans have very short memories. So what you can do is you can take a look at what happened in the past, and usually most Americans are doomed to repeat it. So here's another scary parallel. You can see here in 2013. Let's go 14. Let's expand this chart. So we went up like this, and now we're like that right there. And that's pretty much where we're at right now in the grand scheme of things. So it's not an exact parallel, but it's pretty good. So we've had the tech bubble. We've had the housing bubble. Now what are we doing today? We actually have several different bubbles that we're in. Now, I wouldn't say that we're in the enthusiasm phase. We're either in the greed, the delusion. That's a new paradigm's kind of where we're at, because we're, you know, people are starting to buy up like Uber and stuff like that at like $4 billion and stuff. It's a little crazy. We're not to denial yet. We're not a return to normal. We're not into a fear or capitulation yet. So we're either at fear, delusion, or I mean greed, delusion, new paradigm, or denial, because we're not at the return to normal yet. So America's most dangerous bubble. So U.S. equities, housing bubble 2.0, tech bubble 2.0. So first in equities, the S&P has been up 154% as of early 2009. We've moved up from that. So we've got the equities bubble. And usually it's done because of you've got the very low interest rates, right? So we've done with that. And right now you can see a lot of resurgence in Arizona, Nevada, Florida, and California. Flip this house. So when you start seeing stuff like that in Flip This House, or, you know, Bering Sea Gold or Gold Rush, that calls out a market on a top. So when we had a ton of people buying and selling gold and a lot of TV shows on the U.S. networks, that's when you can start thinking that we're topping out. So the housing bubble, you know, here's one housing. On housing, the co-founder of Case-Shiller Home Prices Index said he is concerned that the recent run may not continue. We've seen a big increase in home prices since 2012, and he would not bet on it continuing. That is just last month, and here you can see there's a timestamp, you know, February the 18th when he said that. Like, I may get out of U.S. stocks, Nobel winner Shiller says, and he also said the comment on the housing bubble. So the tech bubble, now this is the craziest one, I think. So you've got the Mark Zuckerbergs, you've got the, you know, you've got the Facebooks, right? Let me grab my pen here really quickly. So we've got the Facebooks, right? Facebook. We've got the Twitters, TWTR. Those look good. You got the LNKD, LinkedIn. Those are actually holding up pretty well, but not everybody else, like the Yelps, the Pandora, the Zyngas, even the BABAs. They're starting to roll over. So you've got some tech companies that are doing very well, and now you've got tech bubble 2.0, where Facebook buys WhatsApp for $19 billion. It seems just like we're back in the 90s in the dot-com days, right? Facebook buys Instagram for $1 billion. Snapchat seeks new funding that would value their company at $19 billion for a little app. Uber snags $41 billion valuation. So here's some of the crazy evaluations that we have. Uber up 126%, and it hasn't came public yet. Airbnb, Dropbox, Square, Pinterest. So you've got some really, really crazy evaluations. So should we be worried? You know, I'm a little concerned to see so many bubbles inflating so soon after the crisis that has caused so many bubbles in the first place, because the lesson of the last crisis were not learned, and we are destined to repeat them until we finally acknowledge the errors of our ways. Look, we're speculators, we're traders. We don't really care if human beings remember the bubbles, right? Well, if you got some pro-traders taking advantage, just like George Soros is betting against the U.S. stock market in a big way. He did a $2 billion bet, okay? And here's some details on that, where he was, you can look at his, filed his 13F quarterly reports with the Securities and Exchange Commission, where basically he was betting on the S&P 500 in an ETF that tracks the S&P 100. He was actually hedging a bet this time last year that the market was going to drop. So you can still pull those filings and see what big traders are doing. So here's what you can take a look at. What he was doing at that time is he was shorting the S&P because he was hedging his long position in 182 stocks in like Facebook and Apple, so he made a good trade there. He also went long the gold mining stocks, which he lost money on that one. So, you know, I don't think it's a bad thing that you can look at, you know, big money reports like the the 13F of different really good hedge funds and really good traders, it'll actually give you a little mind's eye, a mind's eye into what they're thinking in their mind, so that you can kind of copy that type of stuff. So here's some advice from Jim Cramer. Increase your position in cash. 5 reasons why bears could rock stocks. Valuations are high across the board. Last year's market leaders are facing headwinds. M&A involves unwarranted premiums, and the froth has returned to the market. So there's some reasons. So now that we've got some decent proof, let me show you what I have done with this strategy. All right. Here's some other headlines that I pulled for you. Yikes! Yet another reason to fear U.S. stocks. And then here's Schiller warns bond investors beware of the crash. Now that was just last month. So the first thing you're going to do is you're going to use 3 indicators that are on every single chart platform. And you've got to measure the strength of the move. You first have to ask yourself this question. Number 1, is it getting stronger, weaker, or is it about the same? And right now we're starting to get weaker. In the past, I would say 2 to 3 weeks, you would say, well, it's about the same, or it's a little bit weaker, but it was not getting stronger in the index futures. So let me show you how this works. Here's some of the tops that I've been able to use with this methodology when they pop bubble-wise. I've been able to short the bonds at 1717 and cover them at 1200. I've been able to short the bonds again at 142 and then cover them at 130 and 130 seconds. I've been able to short Apple back when it was a high flyer at 612 and cover it at 402. I've been able to also go long Apple at 451 and exit at 415. So here are some of the best ways to time this thing. First, you're going to use the ADX, which is a trend indicator. It's going to tell you if it's trending or choppy. Then you're going to use the Parabolic SAR, and then you're going to use Ichimoku Cloud charts, and then you're going to place it all together. So one of the biggest reasons that traders get stuck at level 3 is because they overtrade or they trade in chop. So one of the most asked questions is, how do I avoid chop? How do I identify it? So here's a really quick down and dirty thing that you're going to use. The ADX stands for Average Directional Index. The ADX is non-directional, so it will quantify a trend strength regardless if it goes up or down. So in other words, it's going to tell you I've got power to the upside and I've got power to the downside. It's not going to tell you the direction. It's just going to tell you the strength of the move. So let me skip to this, and here are the rules that you need to know. ADX greater than 20 equals trend. Okay, write that down. All right, and ADX less than or equal to 20 equals chop, and you want to avoid it. So let's take a look at an indicator. Here's what it looks like in TradeStation. This green line is the 20 line. We call it the threshold line. If the ADX is above 20, it means this market is trending. Now, the ADX will rise, but the actual market could be in a massive up move, or it could also go to a massive down move. But as long as the ADX is above this line right here, it means we're trending. This is chop, this is chop, this is chop, and this is trend in either direction. So here's what it looks like in real life. So this is like a 2-minute chart of the ES. All right. Does the slope of the ADX give you more info? Not really. So here you can see that the ADX was below 20. Now at this point, let's call point X. At point X, is the ADX is it above 20? Yes or no here? At the X, is ADX above 20 at this point right here? Is this red/yellow line above this green line? Yes, it is. So that means that this market has some good trending environments to it. Now, when the ADX drops below 20, chop, chop, chop. Here's a good trend. Here's chop, and then here's chop. This works for both stocks, options, futures, forex, bonds, pretty much everything out there. Remember, the ADX is non-directional, so it will quantify a trend strength regardless of whether it's up or down. So here's another example. You can see here the ADX rose above 20, and the market went up. It dropped below 20 and told you this entire time right here is to be avoided like the plague. And then another thing, the market went back up here. ADX went back up. All right. You can do it with pretty much, the only problem with the ADX is like this right here. Let's go to an Apple example. So here's a really good example. The ADX here at the open of Apple on a 3-minute said, all right, ADX is above 20, and it stayed above 20 all the way till right here. And then it dropped below 20 here and here, which means chop is to be avoided. And then the ADX once again rose above 20, and then the market sold off. So you see how the ADX doesn't matter if it's going up or down. It's just telling you like, hey, I'm in a trend environment and I'm going to go up. Hey, I'm in a trend environment, I'm going to go down. So in the AM on Apple, it was an up mode. In the PM session on Apple, it was a down mode. Now what you do is you take a look at the daily chart, and if you're in a daily uptrend on Apple, then you would only do the long signals. If you're in a daily downtrend on Apple, then you would only focus on the short signals. All right? So the ADX solves part of the problem. So now we have to fix the rest of the issue, okay? So we're going to add a bulls versus bear component. So what I do is I take an indicator and I couple it together and I make it easier to use. So now what I'm going to do here is I'm going to say the ADX, if it's above 20, I can trade. It's in a trending environment. And then I put a bull to bear ratio. So in other words, if the green is on top, that means the bulls are in control. And if the red is on the top, that means the bears are in control. So let's go walk through a little example here. So at this point example right here, the ADX is above 20. And you can see it's above 20. It means it's trending. The red's on top. Bears have control all the way until right here, where then the bulls then show back up. ADX is still above 20. That yellow line is above that white line. Bulls are in control. That's a long. You stay long until the bears show back up and take control of this thing when they're back on top. Does that make sense? I know I'm covering a lot of stuff really quickly. It's just because I've got about 20 more minutes and then I got to get the heck out of here. So that's step one, okay? Here's another example of a 3-minute chart of the ES. Is the ADX above 20 at X? Yes or no? Yes or no? Yes. All right. So let's say that we're in a daily uptrend on the ES, then we'd want to stay long until when? We'd want to take this signal at the open, stay long until 0.3, where we would exit here and get out. Now, let's say we're in a daily downtrend on the ES. We would miss this entire move, and we wouldn't get short until right here. Does that make sense? Because the ADX is above 20, bulls are in control here, and then the bears show up, and then the bears are in control here. Pretty simple, easy to use, right? I'm not going to bore you with example after example because I actually want to show you some live markets. Remember the example on Apple where we had an AM and a PM? Well, here we have a buy signal because we're above the ADX, and we're all green here except for this little example, these two little nodes right here. So that's a long all the way until right here. ADX drops below 20, we're not allowed to trade. ADX climbs above 20, we're now allowed to trade. Bears are in control, we can now short here. So it's a long here and an exit. If Apple's in a daily uptrend, we do this signal. If Apple's in a daily downtrend, we skip this signal and we do this signal. All right, Parabolic SAR. It's dynamic support and resistance, stop and reverse signal, trail and stop. You can look it up. Wilder wrote a book, New Concepts of Technical Trading Systems by Wilder. I'm going to skip this explanation here. Okay, what I'm going to do, I think a picture is worth 1,000 words. So what a parabolic SAR does is if you suck at trailing stop losses, this will save your life right here, in my opinion. It's one of the best tools in almost every trading platform out there. It's called a parabolic SAR, or support and resistance. It's always in the market type thing. So let's pretend that we have a long signal here on the bonds, here on this signal. Do you see these little blue or cyan dots? That's your trail and stop. So if you got in here, trail, trail, trail. You see how it just gradually goes up as price goes up? So if you got in at X, you would stay in it until bloop, you get a little purple dot, and then you would exit here. So you trail your stop loss. So what it's going to do is it's going to keep you from taking a winning trade and turning it into a losing trade. Okay. Now let's say that the bonds were in a daily downtrend, and now you have a short signal here, and you got short right here. You'd stay short, short, short. Boom. You'd cover right here. So you'd get short on this candle, and you'd cover on that candle. That's not too shabby. Now, is this going to get you the dead high and the dead low of every single move? No, no one can do that. What's going to happen is if you're in a market like this, you're going to miss the first 25% of the move, and you're either going to get out too soon or you're going to get out too late. You're going to miss the first 25% at the top or the last 25% of the move. You just got to get used to that, okay? So here's another example of Apple. Let's say you got long here. You would trail your stop, trail your stop, trail your stop. You'd exit on this candle. Now, let's say we have Apple. We like to be long Apple as a general rule. Then what we would do is we'd get long here, and then you'd have to exit on this candle here, and then you'd get long here, and then you get exit here. Oh man, so this was a good trade. Winner, winner, loser, loser. Okay, now we get long here, trail to stop, and we're still going. So in this trade, you have A is a good one, B, loser, C, loser, and then D, another winner. So it's only 50%, but it's the amount of money you make when you're right, and it's also the amount of money that you lose when you're wrong that really matters. All right, this is an example of crude oil. So we're in a massive crude oil short here, and you can see we had a nice little bottom here and then a double bottom here. So if you wanted to nibble long on crude oil right here, it's probably not a bad idea. Okay, now crude oil's starting to roll back over. Here's another example of the bonds, so you can probably guess why I've been short bonds, because we've been in a massive uptrend, but then I got a sell signal here, and the power shift indicator also told me to short, and then so we rode the bonds down lower, and I'll show you exactly how to do that. And then what I do is I just add the cloud, and I put it all together so that it's really easy for me to use. All right, so let's just check out some live charts. All right. Now I know I've thrown a lot at you really quickly, and I do apologize for that, but let's go through a couple different markets. Let's go at ES, and I'm going to go through, let's go first ADX. So on ES, is it a trade that we can do? Is the ADX above 20, yes or no? I'm going to do this one time, and then I'll just put it all together for you. Yes. And do we know the direction? No, not really, because the ADX doesn't tell us. Okay, let's go to the power shift. All right. Now, the ADX is above 20. Let's see when the power shift said to get short. It said to get short right there. The ADX started to climb back above 20 right there, right in about that time. And we had a short signal because the bears were in control. Do you see that? Give me a yes if you see that. And I'm doing this all live, so it's no PowerPoint. And we'll talk about what we should be doing. All right, so now the second thing I want to do is I want to look at Parabolic SAR on the ES. Okay, now the Parabolic SAR said, okay, we had a top right there, so we should get short. So we have 1, 2 sell signals, right? This is going to help you buy. This is going to help you short bubbles. It'll also help you buy low bottom fishing stuff, all right? So does that make sense? So we should be short here, and our trailing stop is just going to trail us. Let's go see what the cloud chart says. So on the cloud chart, it's below the turning line and below the standard line. So our target for this trade, if we're counter 2-0, and right now if we short it, we should be shorting it on this bounce right here. Okay? Then what I do is I just put it all together, and I go like this right here. I go, bink, power play, and I just go like this. I go at ES, just because it's easier to use, and I go, okay, we had a sell signal here. All right. I had a sell signal here, and then my target is that cloud once it breaks that yellow. So we had a sell signal on the Parabolic SAR. We broke below the yellow line, which my first target was the purple line, and now my next target is 2,000. So how you use the power shift is if the yellow line is above the white line, that means it's trending. If it's not below, if the yellow line is above, it's trending. Below the 20, it's non-trending. And if the red's on top, bears are on control. If the green's on top, bears are in control, or bulls are in control. So let's go through one more example. I got enough time to do it. So let's go at US, which is the 30-year bond. Okay, is this thing trending, yes or no? Yes, it's trending. ADX is above 20. We can trade it. It's not chopping. All right, let's go to the power shift. At US, what does this say about it? It goes, okay, well, in the bond market, it's trending, and since right here, the bears have been in control. We've been ADX is above 20, red's on top, we should be short, correct? Yes. All right, then what we do is we go to Parabolic SAR at US, Parabolic SAR on bonds. So we've had 2 sell signals. We've had one right here, which we caught, and now we've had the most recent one right there, which we also caught pieces of. So short, and then we had a cover today, right? Makes sense? Let's see where the cloud says we're at on the bonds. At US. Oh, Lord of mercy, look. We've closed more than 3 days below the cloud, and we're going below the cloud. So today I reshorted the bonds. I shorted the bonds at 198, lost, or 159, lost money, and then I reshorted them up here at 160, 18, 30 seconds. and then I added to a position right here, and I'm short them right now. Okay, so let's take a look at one more. Let's go at FGBL. This is the Euro Bund, and I trade the Euro Bund. So the Euro Bund, is it trending, yes or no? Yes, it's been trending forever. I love trading this market just because it's easy. So this is a great trending market. Let's take a look and see what the power shift says. Let's go at FGBL. This works on stocks, options, futures, and Forex. So which way do you think I've been trading the Euro Bund in the past, I don't know, forever maybe, right? So it looks up, right? All green, trending well, bulls are in control. All right. Now let's see what the Parabolic SAR says. All right, let's go at FGBL. Looks pretty good. Every now and then it flips back and forth, but overall there's way more parabolics to the long side than there is the short side. So right now we are currently, as of 3 days ago, we are long the Euro Bund with a trailing stop loss of 156.03. And now let's see what the cloud chart looks like at FGBL. Bing! Winner, winner, chicken dinner. It's a long. We stay long. Let's see what it looks like when we put it all together with the power play. Let's go at FGBL. At FGBL is a decent long, right? It's a decent long. If it pulls back, I want to buy it at 157.35. Does that make sense? Now, here's what I want to do really quickly because I don't have enough time. I got 8 minutes. I got 9 minutes. Throw me out some symbols really quick, and I'll show you what you should be doing with them really quick. Well, actually, or do you want me to go through the markets really quick? Let's go at CL. Crude oil. Crude oil is a better short than it is long. You had a sell signal here, and the bears are in control. But look, the ADX is below 20, so it's a non-trade. Coca-Cola. Coca-Cola is ADX is below 20. It's not worth your time. It's not trending. You leave it alone. GC at GC. Gold market, it's below the cloud. ADX is trending. Bears are in control. It's below the cloud. Parabolic's a sell. You should have been short this thing for a good 2 weeks so far. Okay. Visa, see how easy this is? Visa, can we trade it? Yes or no? ADX is above 20. Yes. Bears are in control. We've had a sell signal back here. Our target will be 260. KORS, you see how easy this is to do? All right, is it trending? Yes or no? Is it trending? Yes or no? Yes, it's trending. Bears are in control. It's below the cloud. You short it with a target of 60. Caterpillar. Caterpillar it's just now starting to trend well again. It's a short. It's below the cloud, target 70. Here's one we sent out today in the daily trading video. What would this recommendation be here on Disney? So Disney is trending well. Bulls are in control. We just had a buy signal right here. See it? We had a buy signal at 103.07 and 105.10. So that's how that stuff works. It's pretty easy. A buy on Disney, yes. Netflix, NFLX. I'm just doing these from the crowd. Netflix is trending. The bears have been in control for 4 days. It's below the turning and the standard line. It's probably going to drop to the top of the cloud, which will be right here in this zone. You can either short it here with a target of 416 or let it drop to 416 and buy it as a long. That's how that stuff works. SPY is just the S&P, and that's a short. It's trending. Bears are in control. You would short it with a stop of about 208 and a target of 200. That's how it works. All right, so I'm going to whip back over here into PowerPoint. All right, and I'm going to skip a lot of these slides. You got to have some good setups. A good setup that goes executed. A good setup executed will beat the pants off of a perfect system that goes unexecuted. So it is obviously good enough is good enough. You got to have good money management. You got to have a good entry, and you got to have a good exit. So it is us versus them, and this is not a time to go alone. You know that Wall Street will do just about anything and say anything to make you forget about the risk that you're exposed to in today's overinflated stock market. They want to keep you fully invested and buying even more stocks and fund shares right up until the very last point, until you get your head lopped off by the next decline. So I want you to disappoint them. I want you to preserve your wealth and keep it and grow it safer and safely by understanding fully the amount of risk that you're exposed to right now in the markets. So more than that, I want you to use these principles and tactics to double your money and then double it again as stock prices get hammered into the ground. All right? So there's three types of people in the world. There are those that make things happen, there are those that watch things happen, and there are those that wonder what just happened. So I've got a course where I teach you how to do what I just went through very quickly, and I want to share it with you. So in Module 1, it's how to use the power shift for swing trading and day trading. Module 1. Module 2, how to trade trends and trend reversals. Module 3, how to use the Parabolic SAR for swing and day trading. And then in Module 4, I give you ongoing mentoring. And here's how that works. If I can get the slide to advance. So Module 1, how to use the power shift. Best ways to use the power shift indicator so that you avoid the chop. Always know who is in control and on what side of the market that you need to be so that you can trade on the right side for both swing trades and day trades. One is for wealth building and the other is for cash flow. And in Module 2, we're going to break down for you how to trade trends and trend reversals. If you get this, everything else is a lot easier and simpler to deal with so that you can go with the markets and not against the markets. And it will definitely help. You want to make things simpler and easier. It's a simpler and easier way to trade so that you don't have to think so much. And in Module 3, how to use the Parabolic SAR for both swing and day trades. How to find the best stops for you to use on your particular trades because it's very important. Most people just don't know how to figure that out so that you don't have to guess or worry about it ever again. How to pick the best time frame or tick frame for you to trade. And then Module 4 is going to be how to hedge your trades. This is very important so that you can stay in them longer so that it can potentially increase your profit. A dirty little secret so that you can potentially make a lot more money by staying in the trades longer. We call them crock pot trades around here. Yeah, TOS is available for the power shift indicator. Module 5, ongoing mentoring once a week for the next 4 weeks. We'll meet, and the little live session that I did on charts, that's exactly what we'll do once a week every Tuesday. We'll meet up, you bring your list of symbols, I'll break down all the markets and show you what to do next so that we can find the turning points together in each market. Live Q&A session, you bring a list of symbols and I'll be your little tech guy for about 45 minutes to an hour. So here's everything that you get in the course. The indicator works on these platforms, the Power Shift. It works on Ameritrade, Thinkorswim, TOS, TradeStation, eSignal, NinjaTrader, Sierra, Infinity IAT charts, and those are the platforms it works on. It's a multi-chart platform license so that if you buy it for Thinkorswim, it'll work on TradeStation and eSignal. You don't have to buy it 3 times. Just buy it 1 time and you're good to go. You do not have to buy it more than once. So only 1 time. It's a multi-computer license, so that it'll work on up to 3 PCs. Okay, and then it'll also very easy to install, so that you can easily get it up and running. We have a very simple, short video that shows you how to install it on every platform. If you can't figure it out, we have a free installation service. And if you run into any issues, what we do is by appointment on Tuesdays and Wednesdays, we will climb into your computer from the internet and fix it up for you. All right. Now I'm running out of time. I got 2 more minutes, so I'm not going to talk about who this is for and who it's not for. I'm going to go right to the point and show you that number 1, it comes with a 100% satisfaction guaranteed, no questions asked. If you don't love it, I just give you your money back. That's all. Does it work on a mobile cell phone? I don't think it works on a mobile cell phone. No, it does not work on Metastock, unfortunately. If you don't love this educational series and the indicator, just call us and let us know. You got a 30-day money-back guarantee. Okay. So you can hear Michelle laughing in the background. So here's the value you get. If you go over to hubertcenters.com/power, I'm going to copy that and put that in there so you got it. And boom, there's your link. Here's what all you get broken down. It's a $988 value. You can have it all for the discounted rate of $297. It's for the first 50 people. You can also call the telephone number, area code 859-963-3445. And we've got operators standing by, so if you want to call us and order it that way, we'll definitely do it that way. Any questions? I got about 60 seconds because I want to make sure that I do not go over on my time and push these guys back any farther. So I'll just stay here for the next 120 seconds real quick. Is that for members? Yes, that is the member price, $297. Monica, you could call the office. Does it work on a cell phone? No. Will it work on Metastock? No. Is the power shift on TOS also? Yes, it will work on TOS. We install it in TOS for you, or you install it in TOS for yourself. So it's really easy to do. It's not hard. You don't need the power shift in order to do that. That's just the indicator that I use. I'm just throwing the indicator in for free, and I'm giving you the power shift indicator, and I'm giving you these other 3 courses, and we've been able to catch some of the really good moves. One-time fee, no monthly fee whatsoever. It's just a one-time fee of $297, one-time fee. The last time we taught this course, there were about 350 people, I think, that took the course, and more of them made money than lost money, and they thought it was a really good course, so they liked it.